discuss in today's show. GBTC elevator to hell sees the Bitcoin spot price approach a 100% premium. That's right, bad times for the Grayscale Bitcoin Trust get even worse this week as its discount approaches 50% for the first time. Now check this out. Kevin O'Leary, aka Mr. Wonderful, had admitted in a recent interview he got paid $15 million to be an FTX spokesperson. Also in today's show, FTX's scam bankman-fried to face market manipulation probe, and Quant chimes in. That's right, as part of the broader inquiry into the FTX collapse, federal prosecutors are looking at the role that FTX and Alameda have played in the fall of Terra and Luna. That's right. Also in today's show, FTX hires a forensics team to find customers missing billions. According to this latest report, lawyers have claimed that the FTX assets are either stolen or missing, and now a team of financial forensic experts is attempting to trace the money trail. But will they find it? That's the million-dollar question, or multi-billion-dollar question. Also in today's show, data from October shows that the gold reserves held by the central banks tapped the highest level in 47 years. They are hoarding gold like a mofo. Following the World Gold Council's third quarter report shows central banks purchased a record amount of gold. Statistics show that the gold held by the world central banks is at its highest level since 1974. Also in today's show, Binance US eliminates trading fees for Ethereum. That's right, this announcement comes months after the crypto exchange removed all their trading fees for Bitcoin-related transactions, as they shared here on Crypto Twitter, just in time for the holidays. The best crypto platform for low fees just got even better. Binance US pleased to offer zero fees when you buy Ethereum or trade ETH USD, ETH USDT, ETH BUSD, and ETH USDC for all users with no trading volume requirements. Also in today's show, Quant analyst PlanB and creator of the Bitcoin stock to flow model says a 5,800% Bitcoin rally is coming and calls the current price a steal. Quoting him here from a recent interview, if we assume that the old model, the original 2019 model, is correct, the $55,000 model, then the next halving could lead prices somewhere, and I'm making a very wide range, so some people won't like it, but somewhere between $100,000 and $1 million. I have no doubt whatsoever that we get to the $100,000, $1 million range. And no matter how you look at it, the price is a steal if that's what you believe. So yeah, I am very optimistic. We'll also be taking a look at the overall crypto market, all this plus so much more in today's show. Welcome everyone tuning in to today's live stream of Crypto News Alerts. Today is pod episode 1127, and today is December 8th, 2022, and I am your host, JV, and naturally, we have lots to cover, so let's dive right in. Checking out Coin Market Cap, this is Coin 360. We can see the overall crypto market, Bitcoin trading just under that $17,000 resistance, up 0.73% for the day. We have Ether up 1.6%, trading just above $1,250. Binance Coin up 2%, trading at $287, while XRP, Doge, Cardano, Avalanche are also all pumping in the green. And checking out the crypto market cap, we're currently sitting at $842 billion, with about $32 billion in volume in the past 24 hours. So as you can see, the trading volume is definitely down, with the Bitcoin dominance at 38.4% and the Ether dominance at 18% even. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we got Satoshi Vision leading the pack, up 7%, trading at around $44, followed by the Trust Wallet token, up 8%, trading at $2.59, followed by Terra Classic, believe it or not, up 5%, trading at 0.00017. And below that, we have Quant, followed by Hobby Token. And checking out the top 100 crypto gainers for the past week, you can see Trust Wallet token leading the pack, up 26%. We have AXS up 16%, and also MV up 12.5%. And checking out the Crypto Greed and Fear Index, we're currently rated a 25, back in extreme fear. Very unfortunate. Yesterday was a 29, last week a 27, and last month a 31 in fear. So there you have it. Welcome everyone tuning in to today's live show. Now let's discuss the Grayscale Bitcoin Trust on a massive discount. In fact, the biggest discount it's ever had of all time, which is definitely not a good thing for GBTC. Now check it. Bitcoin investment vehicle, the Grayscale Bitcoin Trust, trading close to 50% below the Bitcoin spot price in the markets. Data from on-chain analytics platform CoinGlass confirms that on December 8th, GBTC shares hit a new record low of negative 47.2% against Bitcoin/USD. Now, in the latest bout of nerves to hit the Bitcoin industry since the fall of FTX, GBTC is nearing half price versus the price of Bitcoin. Now, the largest institutional Bitcoin investment vehicle with assets worth north of $10 billion. GBTC has faced numerous challenges in the recent years. The price of its shares previously traded higher than Bitcoin USD, resulting in what was called the GBTC premium. And since 2021, however, that premium has now turned negative, but the resulting discount has done little to lure additional institutional interest, as previously reported, beyond a key expectations from ARK Invest. GBTC is languishing as an operator of Grayscale, part of the digital currency group DCG, attempts to convert it to an exchange-traded fund, better known as an ETF, suing United States regulators standing in its way. That's right, they're actually suing them for not accepting their spot Bitcoin ETF. And amid the legal battle, FTX sparked liquidity problems elsewhere in the DCG empire, and this led to doubts over Grayscale as well as GBTC. Grayscale declining to show proof of his Bitcoin reserves last month, despite custodian Coinbase confirming its assets were secure, added to the tensions. Quoting them here, Grayscale is in some real trouble if they have to reveal where all the Bitcoins are that back the GBTC, quoting Bitfinex. Popular commented Bitfinex as part of a Twitter discussion last week, and this week things became even worse as Grayscale faced a lawsuit from investor Furtree over what it's called shareholder unfriendly actions. That's right. And meanwhile, overall interest in crypto ETFs have plummeted this year, separate data suggests, and you can thank the SEC chairman, Gary Gensler, for that. Now, Willy Woo says problems are partly bullish for the king crypto. With that, the GBTC premium, having barely recovered from previous record lows, sank even further versus Bitcoin, known as its relationship and net asset value, NAV. Now, quoting Timothy Peterson, GBTC discount to Bitcoin NAV is in the express elevator to hell. Others lamented the slow pace of the change in the U.S. as fueling the fire. Quoting Alistair Milne here, quite a lot of pain this year would have been avoided if the GBTC had made it into the ETF, SEC keeping everyone safe. But unfortunately, the SEC's job is not to protect investors as they claim, but to destroy investors and get them wrecked. And this couldn't be any more obvious with what has been happening in the market. Now, Willy Woo, creator of statistics resource Woodbull, he argued that the impact of fading GBTC exposure was not necessarily straight negative for the Bitcoin price strength. Quoting the on-chain analyst here, the GBTC DCG Genesis fears is a bearish cloud hanging over the market, but counterintuitively, part of the impact has been bullish for the Bitcoin price. He shared on December 5th and also wrote, 37.5% of the people who sold GBTC bought spot Bitcoin to take custody. Selling GBTC does not impact the Bitcoin price. Buying spot does. In an additional Twitter survey, quizzed the platform's users who notionally own GBTC over their motives to sell, as shared here. For people who sold GBTC in the last 30 days, what was your reason? 77%. Here we had 12,000 votes. 77% say view the results. I actually wanted to see all the results. This is a little odd, but buy the spot to take custody was 9%, and bearish on the market was 8%, and 5% said needed the cash. And now I want to point out here, as I mentioned in the intro, in a new interview, I've been wondering, I'm like, how much has Mr. Wonderful received in payment from FTX and Sam Bankman-Fried to be kissing his butt even in the, what's been happening with the collapse here, and still honoring him and saying he's a good guy, doesn't have an evil bone in his body, and if he had the choice to do business with Bankman-Fried again, he would absolutely do business with them. Well, guess what? He received $15 million to be in that spokesperson position. So naturally, he's going to defend his criminal friend. It is what it is, and that's what he is willing to admit. How much more money did he potentially get paid? There's no telling how much money he is involved here with the scandal, but nonetheless, I'll be keeping you updated as more unfolds, which will lead us to our next story of the day, which is FTX scam Bankman-Fried, trying to face he's going to face a market manipulation probe. And ironic enough, Quant, the Luna founder, has chimed in. So let's break this down because this is very interesting to say the least. And we all hope that Bankman-Fried does indeed get probed. U.S. federal prosecutors have reportedly begun investigating whether the collapse of the Terra ecosystem was in fact triggered by market manipulation tactics by the former CEO scam Bankman-Fried. Well, according to a December 7th report from the New York Times, the prosecutors, as a part of the broader inquiry into the FTX collapse, are investigating whether scam Bankman-Fried's empire intentionally caused a flood of sell orders on Terra's algorithmic stablecoin Terra Classic, formerly known as Terra UST, and it looks this way. He was actually trying to destroy other projects. Could you talk about corruption at its finest? The sudden increase in UST sell orders were said to make it difficult to match them with corresponding buy orders, which in turn forced more downwards price pressure on UST, causing it to depeg from its intended 1-to-1 ratio with the US dollar. And the events also led to the fall of the Terra native token, Terra Classic, LUNC, formerly Luna, as the two cryptos were designed to be linked. And while no one has been able to precisely determine the root cause behind the collapse of Luna Classic and USTC in May, it is known that the majority of the USTC sell orders came from Bankman-Fried's trading firm, Alameda Research. You can't make this stuff up, folks. And this is according to the NYT, which is the New York Times. A person with knowledge on the matter also told the Times that Alameda Research also placed a big bet on the price of Luna Classic falling. And like most comments, Bankman-Fried also shared, since the FTX collapse, the former CEO claimed that he was not aware of any market manipulation. Well, of course he wasn't aware. At least that's what he's going to claim, and certainly never intended to engage in market manipulation. Yeah, great way to cover your arse, homie. And to the best of my knowledge, all transactions were for investment or for hedging, he added. And responding to the recent report, Terraforms Labs CEO Do Kwon shared his thoughts on the matter to his 1 million Twitter followers in a November 8th tweet, who suggested it was time for Genesis Trading to come clean about an alleged $1 billion loan in UST to Bankman-Fried or Alameda shortly before Quant's Terra ecosystem crashed. I think the time has come for Genesis Trading to reveal if they provided the $1 billion UST shortly before the crash to Bankman-Fried or Alameda. The purchase from LFG was represented as stemming from interest to participate in the Terra DeFi ecosystem, not to provide ammo for a peg attack. And that's quoting Do Kwon directly from crypto Twitter. Kwon also stated that a large currency contraction that UST underwent in February of 2021 was started by Alameda when they sold 500 million UST in minutes to drain its curve pools during the MIM crisis. What's done in darkness will come to light, Quant added on the matter. So there you have it. What are your thoughts surrounding this? I feel in this probe, it is very clear that Bankman-Fried could have been the actor behind the collapse of Terra/Luna and many other failed projects, attacking them one by one. It's almost as if Bankman-Fried was just a puppet, and then we had the shadow government, the SEC, and the powers that be, and the regulators, and the forces of darkness really operating this exchange and causing chaos in the industry, while Gary Gensler was protecting no investors. They wanted investors to lose money so they can crash the industry and manipulate the market and usher in very ill-intended regulations, which is precisely what they're trying to accomplish. It couldn't be any more clear. So with that being shared, that leads us to our next story of the day. Let's discuss what's going on with FTX hiring a forensics team to find the customers' missing billions, according to this latest report. Here we go. The new management for bankrupt crypto exchange FTX has reportedly hired a team of financial forensic investigators to track down the billions of dollars worth of missing customer crypto. Financial advisory company Alex Partners was chosen for the task and is led by former SEC chief accountant. We have Mac Jaquez. According to a December 7th report from the Wall Street Journal, it is understood that the forensics firm will be tasked with conducting asset tracing to identify or recover the missing digital assets and will complement the restructuring work beyond undertaken by FTX. Now, on November 11th, hackers drained wallets owned by FTX and FTX US of over $450 million worth of assets, and the former CEO scam Bankman-Fried claimed in an interview recorded on November 16th with crypto blogger Tiffany Fong that he was close to finding who the hacker was, and he has narrowed it down to 8 people. Oh, great. Believing it was either an ex-employee or someone installed malware on an ex-employee's computer, or it was a backdoor and you stole the funds, or you know who stole the funds and you're covering for that individual. Now, on November 22nd, a lawyer representing the FTX debtors said that a substantial amount of assets have either been stolen or are missing from FTX, and revealed at the time that the blockchain analytics firm such as Chainalysis has been enlisted to help as a part of the proceedings. Now, the stolen funds from FTX has since been on the move through various crypto mixers and exchanges to launder the funds. The hacker transferred their Ether holdings on November 20th to a new address and swapped some of that ETH for an ERC-20 version of Bitcoin, which is a fake Bitcoin, FYI. After bridging the funds to the Bitcoin network, they then used a laundering technique called peel chaining that subdivided the holdings into increasingly smaller amounts across multiple wallets and sent the Bitcoin through a crypto mixer and then the OKX exchange on November 29th. The hacker also attempted more peel chaining by splitting 180,000 ETH across 12 newly created wallets on November 21st. And former CEO Scott Bankman-Fried also previously claimed to have unknowingly commingled customer funds at FTX and its sister trading firm Alameda Research with customer funds at FTX loan to Alameda. Now, FTX's new CEO and chief restructuring officer, John Ray III, was scalding in his initial bankruptcy filing, saying that he has never in his 40-year career seen such a complete failure of corporate controls. Gary Gensler, what's going on, big dog? He claimed Bankman-Fried and his closest colleagues are potentially compromised and use software to conceal the misuse of customer funds. Damn it. Call it like it is, because it is what it is. Scamming, Bankman-Fried. I mean, this is the biggest corruption in crypto history. I think in investment history. Has there ever been a scandal involving $30 billion missing? Just like that? Or, tens of billions of dollars gone? And he just says, oh, I don't know what happened. Oh, I don't really know. Great question. Maybe someone stole it. I can figure it out. It has to be between these 8 possible scenarios. This is insanity, to say the least, but it's entertainment at the same time. So thanks for the entertainment, Scam Bankman-Fried. And let's move on to our next story, because I don't want to give this fool too much time and energy. Let's discuss central banks around the world are hoarding large amounts of gold, the largest amount of gold hoarding in like the last 70 years. So why do you think they're especially hoarding so much gold right now? Well, let's discuss it. Here we go. Data from October shows gold reserves held by central banks tapped the highest level in 47 years. Wow, 47 years. Central banks around the globe are purchasing vast quantities of gold during the first week of November. The World Gold Council reported had shown central banks bought a record quantity of bullion. Now, they say quarter 3 2022 data indicated central banks stacked close to 400 tons of gold just in quarter 3, the highest quarter on record in terms of gold buys. What do they know that we don't know, right? They also noticed that there was a mysterious gold buyer during the third quarter, and China is suspected to be the secret gold purchaser. New statistics published after the quarter 3 2022 report show that during the month of October, central banks worldwide obtained 31 tons of gold. The Central Bank of the United Arab Emirates bought the most gold in October. Interesting. Adding another 9 tons of gold to the country's stash. That's because they do not trust in their own currency that they give out, which is fiat. They know fiat is trash, so they need a real asset, which would be gold in this case. Now, data indicates that the UAE acquired 18 tons of gold throughout this year, and presently the aggregate quantity of gold acquired by central banks worldwide is at its highest level in 47 years since 1974. Metrics show that Uzbekistan stacked another 9 tons of gold to its reserves after buying the precious metal for 7 straight months in a row. And Uzbekistan has purchased 37 tons of gold this year, and gold represents 60% of the country's total reserves. Data also shows that the National Bank of Cambodia managed to purchase 2 tons of gold in September, and Kazakhstan acquired 3 tons of the yellow precious metal in October as well. And central banks acquire the precious metal gold in order to diversify their foreign reserves. In essence, it is believed believe that the precious metal can reduce the overall risk of their reserves because gold has been considered a safe haven asset for thousands of years, and the world's central banks traditionally obtain gold from large commercial banks or directly from gold mining companies. Gold has been performing well during the last 2 weeks, and on Wednesday, an ounce is currently trading at $1,778 per unit, and since November 3rd of this year, gold has increased 9.15% against the US dollar from $1,629 per ounce to the current $1,778 per ounce value on Wednesday, December 7th, 2022. So there you have it. Expect central banks around the world to continue hoarding vast quantities of gold as they prepare maybe for the downfall of fiat currency in general and a new world order and releasing of a central bank digital currency, which we have pilot programs in action all around the world. I discussed this in great detail in yesterday's show. Just note this: CBDCs are programmable money, programmable by the shadowy government and central banks. So never trust a central bank digital currency which is controlled by a central authority, which has thrown us overboard a very long time ago. And with that being shared, our next story of the day, quite interesting. We're going to be discussing Binance being very competitive in the markets. Recently, they came out, made an announcement that the most popular Bitcoin trading pairs, 0 fees. Well, now they just came out and said, now it is official. Ethereum will also have 0 trading fees on the most popular trading pairs. And let's discuss this because Binance has been doing some big things. Binance announced that it has expanded its 0 fee price model to Ether effective immediately, which means as of now, according to the announcement, users are now able to freely trade 4 Ether spot market pairs, including ETH USD, ETH Tether, ETH USD coin, and ETH Binance. That's right, which they announced on crypto Twitter. Now, effective immediately, the US exchange also eliminated gas fees on all Ethereum transactions made through the buy and sell feature on the website, which is another big deal considering the gas fees on the Ethereum blockchain are absolutely insane. Now, in June, Binance US followed in the footsteps of Robinhood, which pioneered no commission crypto trading back in 2018 by removing all Bitcoin spot market trading fees for Bitcoin USD, Bitcoin USDT, Bitcoin USDC, and Bitcoin BUSD, which is the Binance version. Binance US operates as an independent entity in the United States, but still bears the same name and logo as the global Binance crypto exchange. And as the name implies, Binance US caters primarily to American crypto traders. How many of you are actively using or have used the Binance US exchange? Let me know in the comments below. According to Binance US President and CEO Brian Schroeder, eliminating fees on both BTC and ETH cements the company's position as the low-fee leader in crypto. Facts, can't argue against that. He added that now, more than ever, it is critical that platforms operate with users' interests first. And I agree 100%. They're obviously leading the way. As Brian shares here, by eliminating these fees, we continue to cement our position as the low-fee leader in crypto, bringing greater pricing competition and helping to restore trust in the broader ecosystem. Now more than ever, it is critical that platforms operate with its users' interests first. Now, exchanges obviously play a crucial role in crypto adoption. Facilitating 0 fee transfers encourages users to transact more with digital assets. And if sending funds from one point to another is expensive, millions of potential users would avoid or limit their use of the technology. Exchanges that avoid charging fees can still earn on no-fee transactions through spreads. And in trading, a spread is known as a difference between the bid price and the ask price of a trading pair. So there you have it. This is definitely good news for traders using the Binance exchange. And I'd love to ask your thoughts in the comments. What's your favorite exchange that you would likely to use if you had to make a big trade today? Would you go to Binance US? Would you go to Coinbase? What is your current favorite exchange? After doing the research, for US investors specifically, in my humble opinion, Binance, just based on the trading fees alone, is the best option. Coinbase does charge pretty significant trading fees and also not very clear, and it's also very confusing as Coinbase offers multiple platforms. They now have their advanced platform, Pro, they shut down, and they also have a Coinbase One membership where if you pay a monthly fee, you get discount trading fees. But again, I feel Binance is superior. But by saying that, I'm not telling anybody to self-custody their crypto in Binance or any exchange for that matter. Self-custody your crypto, but if you need to make a quick exchange and you want to do so for 0 fees, consider Binance. With that being shared, now let's break down our final story of the day and discuss a $1 million price prediction. Actually, to keep it 100, the prediction is between $100,000 and $1 million. So we got a 10x range here. But nonetheless, here's what PlanB had to share. Popular quantitative analyst PlanB doubles down on his forecast of a massive Bitcoin rally. Let's freaking go. In a new interview with crypto analyst Scott Melker, PlanB says Bitcoin can soar more than 5,800% based on the stock-to-flow model, which is notorious for. The stock-to-flow model predicts an asset's value changes by comparing its current price to the rate at which its supply is mined, and Bitcoin supply will be squeezed within the next halving event scheduled in 2024, probably going to be around March. Now, here's quoting PlanB. If we assume that the old model, the original 2019 model, is correct, the $55,000 model, then the next halving could lead to prices somewhere, and I'm making a very wide range. Some people don't like it, but somewhere between $100,000 and $1 million per BTC. PlanB says he is confident of the forecast unless his model is proven invalid or if Bitcoin dies. And at this time, we have Bitcoin trading at roughly $17,000. So a price rally to $100,000 would increase the top digital asset value by 494%. And to reach $1 million per BTC, Bitcoin would need to increase its price by 5,837%. And quoting PlanB here, I have no doubt whatsoever that we get to the $100,000 to $1 million range. And no matter how you look at it, the current price is a steal if that's what you believe. So yeah, I am very optimistic. And in the near term, PlanB previously said that a Bitcoin bottom could form sometime within the next 3 months, which means between now and February. And he said Bitcoin typically reaches a bear market low about 18 months after hitting a record high price. And to watch this interview PlanB did with Scott Melker, the Wolf of Wall Street, entitled Bitcoin Can Get to $100,000 or $1 million. Check the show notes below the video in the description. And with that being shared, now let's dive right into. Actually, I want to share one more thing with you from PlanB, which he shared this morning. He wrote darkest blue, sharing this chart from the stock to flow model, and you can see when we are in the dark blue, things can reverse, and when things reverse, expect big things ahead for the King Crypto. And let's see if he has any other more recent tweets that we can share with any more insights regarding his notorious stock to flow model. Let's see here. So that was 4 hours ago. And he also retweeted Jack's tweet. If the goal is transparency to build trust, why not just release everything without a filter and let people judge for themselves? Referring to Elon Musk's Twitter files, why not just release all this data at one time, which is interesting. And I know he's supposed to be releasing version 2, Elon, a little later on today. Is there anything else regarding stock to flow as of recent? Not looking like it. But I do note that the stock to flow model does predict obviously at least $100,000 to $1 million Bitcoin price sometime after the next halving in 2024. So that's what we know at this time. Where do you feel the Bitcoin price is likely to be at the time of the next halving? Let's hypothetically say March 2024. Let me know in the comments right down below, which takes us to our final segment of the show, which is my favorite part, the live Q&A. I want to give a shout out to everyone in the live chat, including Bitcoin Trini. We got Bitbud, we got Ellen, we got Matthew C, we got Chris Minka, we got Nathan Roth, we got Dragon Flower, we got Hiram, we got Scott. Good to see you as well. Dragon Flower, always a pleasure. J-Dub the Laker or Leaker. Yeah. Wow. A lot. Dan Drummond in here. We got tons of comments. This is awesome. So I'm going to start from the top and I'm going to scroll down. Hey, I made it live again, says Nate. Go JV, 5,800%. Sounds good to me. I'm beginning to be set up for it to happen. That's right. I mean, who wouldn't want to see a 5,800% price increase in the King Crypto over the next couple of years? That would be insane to say the least. Scott says, yo, JV. Welcome, Scott. Anyone interested in Kronos coin price or hold it? Seems like a good buy. Let's touch upon that. A CRO actually got rebranded to Kronos, which is the native currency or token of the Crypto.com exchange, Crypto.com being the official sponsor of the UFC. But do keep in mind, there has been a lot of talk that after FTX went under, that something can potentially happen to Crypto.com. So I would not be bullish on an exchange coin at a time like this. I mean, the only exchange coin I'm probably bullish on is BNB, which is Binance coin, just because the Binance exchange, I mean, look at what they're doing, leading the pack and just innovating, the zero trading fees, et cetera, et cetera. And if you have the, basically when you're trading on the exchange, it kind of forces you to use their native token to get the discount, to get the lowest fees possible, virtually meaning almost every trader on the Binance exchange has that box checked to get the cheapest trading fees possible by using BNB. And as long as traders are doing that, and as long as Binance is the largest exchange in the world, I would expect to remain bullish on BNB. But I cannot say the same thing about CRO, but that's just my 2 Satoshis. If any of you are bullish on Kronos, let me know in the comments right down below. Nate says, is Will Smith that like button? Yeah, the greatest compliment you can do for the show to show your support is to pretend that like button is Scam Bankman-Fried's face and smash it and turn on all notifications and just make sure you're subscribed to the channel. And Nate says if Grayscale and GBTC are strong and will survive as they claim, then the GBTC discount is a crazy opportunity. That's right. And that's why you have investors like Kathy Wood of ARK Invest seizing the moment and taking advantage of it. Chris Minka says paper Bitcoin versus the real Bitcoin. These exchanges don't have the real Bitcoin. Supply shock will come soon. So the only question is, how soon? And you make a great point. They take your real Bitcoin and they give you an artificial version of it, like a wrapped Bitcoin. That's exactly what FTX was doing. So do not give your crypto to hold on the exchanges. Again, only put the crypto that you're specifically trading on the exchange, remove it from the exchange immediately after the trade is executed and put it in self-custody. You know what I mean? Matthew says, I think they survive, but they have management fees. So they are still losing over the long term against just hodling actual Bitcoin, referring to the Grayscale Bitcoin Trust. That's right. They earn a massive amount of money in these fees, and that's how they remain in business. Merc30 says, what's everyone's thoughts on Bitcoin 10 to 12,000 happening, or even 5,000 as we heard, or maybe it doesn't? There's lots of speculation, and that's a great question. Well, let's ask everyone in the house here today, where do you feel the Bitcoin price is likely to bottom out this crypto winter? Keeping in mind the current low is at what, $15,500? My guess is somewhere between 10 to 14,000. I think we're likely to go down from here, but that's just my prediction. I could be right, I could be wrong. Can we potentially drop below 10,000? Anything is on the cards, because I don't even think the worst of this crypto winter is over yet as the contagion continues, but that's just my guess. I'd love to know your thoughts. Ecoin says a wick to 10 to 12,000. In my opinion, Merck says we hit 15.5 2 to 3 times already. Interesting. So yeah, we may break down further. Anything's possible. Good to see you as well, Ellen. I appreciate your support. Merck says, I think 10 to 12,000, Matt, is possible as a dream. Also, well, anything's possible. Merck says, or Chris says, all that really matters is you get Bitcoin into your cold storage at the price you think. We will see what happens. Sage advice. And Nate says, with so many hodlers moving so much Bitcoin off the exchanges, especially so FTX, there's going to be the mother of all supply squeezes when demand kicks in. Don't miss out. You make a great point. I agree with you. Dan Drummond, good morning, family. Exchanges won't exist in 3 years, falling like dominoes. Then the world will finally figure out what Satoshi meant by peer-to-peer. You make a great point. Nothing would shock me. Ellen says, BitBoy said Gensler will be stepping down. Well, hopefully he steps down, but unfortunately, they're just going to replace him with another suit who is just as corrupt as him. Because, I mean, to be a chairman of an organization as corrupt as the SEC, they're just going to replace him with another corrupt individual, because now the entire crypto industry of millions upon millions of people all despise him for not protecting us against the Luna collapse, the Three Arrows Capital, against Celsius, against FTX, and the list goes on and on. So what good is regulation? They front, hey, we're here to protect we're here to protect the investors. No, you're here to protect yourself, align your fat pockets, and shake down the industry for hundreds of millions or billions of dollars, which is what you've been doing. But realistically, how many investors have you been protecting with your basically gray areas of providing no clarity on regulation? And so what do crypto investors supposed to do? So they keep us with this uncertainty, because they know as long as the overall market feels the uncertainty and they don't know what to do, it's going to lead to fear and extreme fear. And lo and behold, what? We have been stuck in fear and extreme fear for the majority of this entire year. We're already in December, right? This year is almost over. We've been stuck in greed and extreme fear for the majority of the entire year. That's thanks to organizations such as the SEC. But hey, it is what it is. Ellen says, me too. Gensler needs to be investigated. He is dirty. Collusion, can you say? Collusion, absolutely. There's no doubt about it. Dragonflower says, imagine going after Kim Kardashian just to let Sam Rugg pull millions of people. That's right. And they're not even really going after Kim Kardashian or Floyd Mayweather for promoting Ethereum Max. I just read an article this morning. They're not even going after them no more. So they're pushing it back. It's not really a big deal. It's just smoke and mirrors. It's like distract everybody here, the oldest magician trick. Meanwhile, we'll pull everyone here. People, the crypto industry will lose tens of billions of dollars, and we'll just point at Kim Kardashian for receiving $1 million for an Instagram post for Ethereum Max. It's a clown world, to say the least. I'll leave it at that. J.W. Laker says, Gensler is a joke. I would be ashamed to show my face if I did my job so bad. Exactly. Hence why he's not showing his face. I did a tweet the other day showing a meme comparing Gensler to Mr. Burns from The Simpsons. And they were like, same hair, same baldness, same evil grin, the same, it's like one and the same. So yeah, Gensler is ultimately Mr. Burns from The Simpsons. Dan says, I don't think anyone makes it. All casinos get closed when all the assets are unregulated securities. You make a great point. With Ethereum potentially being deemed a security, which I think it most likely will, they can deem the majority of all the crypto assets in the industry an unregistered security. And then all of a sudden, it causes mass chaos, and this can suppress the prices because now everything needs to be accounted for. And a lot of people are in crypto because they don't trust the government. They don't trust the central banks. They don't trust the politicians, right? They want to be able to hold money and that not be held against them because they have a different alternative opinion than the mainstream, and they don't want to get shut down like a Kanye West, where JP Morgan says, yeah, who cares if you have hundreds of millions of dollars banking with us? We're shutting you down. Move your money, right? Because he has a different opinion, which is insanity. But that's the world we're currently living in, right? And that's what makes Bitcoin so much more valuable. Bring Facts, and shout out to Bring Facts. Right before 9/11, the Pentagon lost a couple $100 trillion. That's right. That's why they bombed the Pentagon. That wasn't a airplane. There was no wreckage of a crash because they sent a missile to blow up the record keeping so they can go not be accounted for those trillions of dollars. Abso-freaking-lutely. There's no question about it. Chris says 2.3 trillion went missing from the Pentagon September 10th, 2001. Wild, right? Ellen says, yeah, I own gold and silver royalties, and Russia repriced gold yesterday at $3,600 an ounce. Did they? Interesting. Matthew says, I can see some of them just becoming regulated securities, Dan. Probably not many, maybe 10 to 50, not 10,000 plus scam coins. Yeah, right. Ellen says, no, I think Polygon and Chainlink are keepers. Well, just do note, I know Chainlink is an ERC20 token on the Ethereum blockchain, so if that's to be deemed a security, it wouldn't be shocking to me. Matthew says probably ETH, Solana, and Quant, possible Doge. Dragonflower says they won't kill the crypto market. They make too much in capital gains when the market is running. Dan says if it has a CEO and a lawyer, you can serve papers to it. It's a business for profit. It doesn't pass the Howey test. That's right. That's why they have this outdated Howey test still there, because they want as many of these cryptocurrencies to be deemed a security. Matthew says true dragon, but I bet many of the 10,000 get wiped out. Yeah, facts. I think 98% of cryptocurrencies do get wiped out, considering most of them serve no use and no purpose. Dragon said, no purpose but to steal your money. Dragon says, yeah, out of the 20,000 cryptos out there, most have no trading volume anyway. Trini says, yep, 2.3 trillion. And the plane hit the exact location in the Pentagon where that information was stored. The missile, not the plane. Yeah. People are aware and will opt out. Yeah, opt out of the matrix. Dragonflower reminds us they're going to 1099 me for a $600 transaction. Yeah, while they can't account for trillions in missing funds, they want to go after you and your $600 transaction. Go figure. Matthew says, I did pay my bills, keep enough for expenses, and hold less than 1,000 in cash. I hold a minimal amount of fiat currency as well, just enough to cover the bills. And when CBDCs roll out, I'm not participating in that corrupt system whatsoever. I'm just going to be a pure Bitcoinist and live off of Bitcoin, which I ultimately do right now, but I still use fiat just because it's more convenient at the time. But when we get off of a cash standard and there's a cashless society, I cannot see myself ever participating in using CBDCs. So Bitcoin to the moon. I get a paycheck every week, says Ellen. Dragon says Coinbase has survived bear markets, even though their fees isn't the best. I feel safer. Okay, well, that's what's up. Thanks for sharing. Matthew says, I think those are the only two safe ones, Dragon, Binance and Coinbase. Binance has lower fees, but Coinbase is regulated and safe. Well, all the major exchanges are regulated, but that don't necessarily make them safe. So do keep that in mind. Chris says, Binance offers free trading. That's right, free trading. Matthew says, I am opting out. Opt out of the matrix. What's the best way to opt out? Purchase Bitcoin. Right? You want to get out of the matrix? Keep purchasing Bitcoin. Eventually, you own enough sats to where you won't have to depend upon fiat currency or be enslaved by it any longer. Matthew says, do you think there will be a mad rush into Bitcoin if they call everything else securities? Abso-freaking-lutely. I can see that Bitcoin dominance climbing on up from 38% to 90% if every other altcoin is deemed a security, because we don't want the SEC regulating these cryptos. So if it's a commodity, it's CFTC. If it's a security, that gives Gary Gensler the green light to come after you, and we're ready to know how corrupt he is and that organization. Matthew says they got to keep slanging that FUD to try to truck people into the CBDCs coming out next summer. Say no to CBDCs. That's right. Just say no to drugs. BitBuzz says it might make sense just to get one or get some just in case it catches on, quoting the late great Satoshi. Nathan says upcoming Fed meeting. We'll see what FUD becomes. Facts. And Matthew says, I wonder what price we would have made it fixed, would have bought 1.4 billion in Bitcoin. Customers thought they were buying instead of FTT-ish coins. Facts. And now for the big finish, which is a recap of what I cover with you here in today's show. We discussed the GBTC, which is the Grayscale Bitcoin Trust elevator to hell. Sees Bitcoin spot price approach a 100% premium for the first time. We also discussed Kevin O'Leary admitted receiving $15 million to be the spokesperson of FTX, one of the many. We also discussed FTX's scam bankman-fried to face market manipulation probe, and Quant chiming in. And we also discussed FTX to hire a forensics team to find customers missing billions. According to this latest report, do you think they're likely to recover these billions in missing customer funds? Let me know in the comments below. We also discussed in today's show, data from October shows gold reserves held by the central banks tapped the highest level in 47 years as they continue to hoard the precious metal. And we also discussed breaking news: Binance US eliminating their trading fees for Ethereum for their most popular trading pairs. Also, we discussed Quant Analyst, PlanB, creator of the Bitcoin stock to flow model, saying a 5,800% Bitcoin rally is incoming and calls the current price of a $16,000 Bitcoin a steal, and his target is somewhere between $100,000 and $1 million. Proceeding the next halving in 2024. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below, and I look forward to seeing you